Hello and welcome everyone. Hope you're doing very well. Today I'm back again with a great stock analysis, this time with your favorite Mercedes Benz, one of the biggest car producers in the world. I don't need to introduce the company. The question is, should we buy the company? Should we hold it? Or do we think the company is on its way down? Well, there are different ways to analyze this company. But before we start analyzing the company, let's just take a look at the news around the company. The biggest, most major news out there is that Mercedes-Benz expects lower earnings, but lifts its dividend. Now, that is, we can analyze this in different ways, guys. One way is that if you are having Mercedes-Benz as a dividend stock in your portfolio, absolutely a fantastic stock to hold because you have great cash flow. And that means, well, the stock is going to give you good return quarterly and annually based. I think they raised it up to 5 euros and 30 cents, which, I mean, it's a lift from 5 euros and 20 cents, and now we're at 5 euros 30 cents, which is quite a good lift. I think now we're sitting somewhere around 7 to 8% dividend, which makes it a good cash flow kind of stock. However, as we know, when the company lifts its dividend, you put a lot of pressure on the company's earnings and profitability, because the profit is being basically distributed to all its investors. And, well, the story gets a little bit more grimmer when you look at the lower earnings. As you know, auto sector is definitely under tremendous amount of pressure in Europe and worldwide. The lawmakers are not necessarily helping the automakers to perform better. And the company itself said on Thursday that the net profit slipped 21.5% on year to 3.16 billion euros. And the net profit expectation is to finish the quarter at 2.8 billion. That's a big decrease from the last earnings. So that shows us that the company is going to have some cash flow problems. Now, they have expected their revenue to be stable, and they expect their adjusted EBIT margin of 10 to 12% in the car division, and then 12 to 14% for the vans. And industrial free cash flow is expected to finish 2024 at slightly below last year's level of 11.3 billion. So far as earnings are concerned, the company is not so positive. Having said that, let's go and take a look at some key factors and key elements before we go into the chart analysis and take a look at the chart. Well, the company has been having $77.2 billion worth of market capitalization with a PE ratio of 5. Sounds very interesting and attractive. Their next earning report is, by the way, end of this month, which is like in more or less 2 weeks, give or take. And their last reporting was December 31st. And, you know, they had a great reporting net profit margin of 9%, which is amazing. Earnings quite stable, and revenue. So far, the company is an absolute solid company to have in your portfolio. However, what makes the company more interesting and perhaps makes you more cautious is when you take a look at the following data. The first data I would like to share with you is right here. Take a look at their debt to equity, guys. Despite the fact that they've been trying to decrease the debt to equity ratio, it's still at a staggering 117%. Which is way above average, and that is definitely not good in an economy where the interest rates are hiking up and the cost of capital is increasing. Therefore, that is not good news for the car maker. The next interesting thing to take a look at is when you look at their past earning growth analysis, where the company underperformed the market, and actually the industry had a 1.2% increase. The company had a negative 1.7%. That is not so good for the company. The next very interesting element that we have to take a look at is the free cash flow versus earnings analysis. Now you see the earnings is not so bad. Depreciation and amortization is almost okay. And when you look at the net working capital is big time negative. That puts pressure on free cash flow of $6.2 billion. And as you know, free cash flow is one of the main elements of companies reinvesting in their infrastructure and their bases and productions in order to boost profitability through future generative investments. So that is not necessarily good news for Mercedes Benz. Having said that, let's take a look at their chart and then figure out if, under the circumstances, we should invest in the company or perhaps short them or even hold on to them. Well, the chart, this is the long-term chart again since 2009. The chart has been pretty much on a cyclical term with a low of more or less $20 and a high of 92, guys. We had quite a good run during, post-COVID, all the way up to almost $90. Now, the question, if you look at here, obviously you see the chart having a very strong resistance line at the current price range, $74. And you see stochastics showing a sort of a reverse trend. And MACD turning basically red. That is a definite sign that the company is going to go through a correction very soon. And the third thing that will definitely confirm the trend is basically this resistance line, guys, right there. As you can see, it's the first strong resistance line for the company, which the company has struggled to keep or to break through. Therefore, I do not see this company going through a big bullish run, at least for now. If you look at the shorter chart, like the smaller range, again, you see a clear resistance at $76 point and an appetite for a correction. Now, the question is, should I buy this stock right now? The answer is definitely not. My prediction is once the dividends are paid, probably you will see a big sell-off. The question is how low the stock will go. In my opinion, $67 would be a very good price range for a bottom, because that's where basically we had this support line. So you could potentially go into the stock somewhere between $67 to $69. That is this support line, guys, here, right here, and you can trade the stock in this range. However, the next support line would be somewhere around lines of 63. I do not recommend this company right now. However, if you're a long-term investor, having the stock in your portfolio definitely is beneficial because of its dividend payments. But I see a big headwind coming up for the stock, probably for the next 6 months, maximum until the end of the year. And then we will see how the market will basically perform and how the earnings will change after that. Thank you very much. Please don't forget also to leave your comments below so that I can read your comments and I can pick the stocks that you like to be analyzed, and hopefully the videos are beneficial for you. Thank you again and have a nice day.